Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the Deal Quest podcast. Let's get started. Robert Levin brings a uniquely powerful perspective as both a serial entrepreneur who has built and sold 3 companies and a seasoned investor who has deployed over $300 million across more than 20 successful deals. Drawing from his journey from a Navy veteran to a Harvard Business School graduate to becoming a respected voice in the investment community, Robert shares compelling insights about building and scaling businesses that resonate deeply with audiences. As a frequent podcast guest, he's known for breaking down complex investment and entrepreneurial concepts into actionable wisdom while weaving in memorable stories from his experiences leading multiple companies to successful exits, including 3 IPOs. He brings a mission-driven perspective to his work, mentoring the next generation of entrepreneurs and his board leadership and mentoring of young entrepreneurs. Robert, welcome to the podcast.
Thank you, Corey. Happy to be here. Thanks for having me.
So listen, folks, anybody who is a listener to this podcast, just from that bio, has no questions in their mind on why we're having Robert on with that extensive deal and entrepreneurial experience. But before we get into all that, Robert, I want to take you back to when you were maybe 8, 10, 12 years old. What did you want to be as a little kid? Because I'm guessing a serial entrepreneur and deal maker and investor probably wasn't it back then, but you tell me.
No, nobody grows up with that in mind. 8, 10 years old, I think I probably wanted to be a professional basketball player, but I don't think that was going to be in my future, being a short, white, Jewish kid from New Jersey. So I think that dream got squashed pretty quickly. But, going a little bit further, I always had a bug for business. And more so, I always had a real interest in figuring things out, right? I think that, and I think those two things go, very well together. I mean, back from my earliest memories, I can remember, taking things apart in the garage and not being able to put them back together, but taking them apart quite a bit. Your parents get pretty upset, then they come home and they see their bikes in pieces on the floor in the garage. But I just was always interested in how things work and all the little bits and pieces of it. And as soon as I figured out that you could do that and make money at the same time, I was like, oh, maybe this is for me.
I love it. It triggered so many memories for me. I mean, first of all, I grew up playing basketball and I was a short Jewish kid in Brooklyn. And considering that I'm 5'8", I was a pretty damn good schoolyard basketball player, but that was about the level. And then, you talk about taking things apart. This is a talent that I didn't even have the talent to take things apart. My brother, who's 5 years younger than me, and I'm dating myself, but there'd be a transistor radio that stopped working. And my brother at 8 years old would take the thing apart and put it back together and it would work. We didn't even understand how he did that. And he ended up becoming an architect, which maybe is not surprising. And I went into law where I don't do anything, that's just, maybe we both ended up in the right place. One other question looking back, what was your first deal of any type? Whether it was something early in your career or maybe even before that as a young person, what was your first thing you would consider a deal?
Yeah, it depends on how you define the deal, but I'm not sure if you had this growing up in Brooklyn, but when I was growing up in the suburbs of New Jersey, we had one friend who had a nice big house and parents traveled all the time. So we were the let's throw a party on Friday night crew, even in high school. So I don't know if you want to consider it a deal. I think our first deal was convincing his brother to buy us a keg of beer so we could charge people to come over and give us $5. And it was one keg of beer. I think a couple hundred kids showed up. So I think they may have gotten 1 cup of beer each. But I think that was officially my first business, my first entrepreneurial venture. And it just sort of kept going from there.
Well, it's funny. I don't tend to do this on the pod, but it's reminding me of all these overlaps. When I was in college, at Stony Brook, my last 2 years, I was the Claire Rose beer rep on one half of the campus. So anybody, they could go drive and pick up a keg or two. But if you wanted like a dozen kegs for these big parties delivered on campus from the beer distributor, they had two reps on campus, and I had half the campus for my last 2 years, and everybody who needed significant beer deliveries had to go through me, and I had a wholesale price, and I could retail it for whatever I want. And even more so, I got into like I didn't have to pay for any party on campus, and I also got all the paraphernalia. Back in the day, they were the beer lights and the signs or whatever that people loved to hang in their dorm room, and I was the guy who had all that stuff. So,
Hey, you cornered the market.
yeah, it was a great gig. All right, any case, so there aren't that many people out there who have been involved with three companies that have IPO'd, have done other kinds of deals, have become investors. How did that journey get started for you?
I jokingly refer to myself as the accidental entrepreneur. I never, like you said, I never grew up thinking, I'll date myself for you also. I'm 54 now. So I was born in 1970, grew up in the 70s, 80s in middle school, high school. An entrepreneur wasn't a thing. Like nobody was talking about being an entrepreneur back then. Like you owned a little business or you had a business or you ran you went to work for a company. So it didn't have the cachet and certainly the trendiness as it does today. So I went into the Navy. I studied computer science. I worked on some pretty cool things there. And when I got out, I always had a pretty good background in math, and it sort of came easy. So I ended up with a finance degree and went to work as an equity analyst for a big insurance company on the buy side, as a buy side analyst. And it was interesting, but it just didn't provide enough in terms of just writing reports and handing them off and letting people, and then going on to the next one. But the company that I was working for at the time was kind of my first exposure to an IPO. They were actually becoming a public company. So we were part of the group. They grabbed a bunch of us and part of the group that worked on the public listing with the investment bankers and the consultants and the lawyers. And it was an amazing opportunity to kind of just get out and see everything that it took to bring I think at the time, the company was going on 100 years old, and it was a mutual company, owned by its policyholders. And getting that thing public, it was this great indoctrination. But after the IPO was over and it kind of died down, I just didn't see myself working in a 10,000 person publicly traded insurance company as an analyst anymore, and decided that, I kind of wanted to look for something else and didn't find it right away, but ended up starting my first company, like I say, almost by accident. It was really at the beginning, I wouldn't even call it a company. It was just a project that company had. And I was naive enough to say, sure, I could do that. And they gave me a contract and off I went. But it was one company, one project. It was a long project. It took about a year and a half. But as we were coming to the end of that, it kind of dawned on me like, well, we hired a bunch of people and we have an office space and a receptionist and rent. We better go find another customer. Like, we better find somebody else who might want this. So I didn't know anything about marketing, sales, any of that stuff. We were just kind of heads down in this project, but I knew that this was, it was my job to go do this. So I asked the company that we were working with, do you know anybody else who would like this? They were nice enough to make some referrals. And the company grew at that point. We kind of got our legs under us, and that business ended up being acquired, as you had mentioned earlier, as the first business. It wasn't a huge acquisition. It wasn't like tens of millions and billions of dollars where I could go off and do nothing. But I remember a friend of mine saying at the time, it's like, hey, you build and sold a company, nobody can ever take that away from you. Like, that's it. If you never do anything else, like, you've got that in your back pocket. And so it really was, and I think this is, if you look at the arc of the couple of businesses that I'd started and then going on into the investing side, the perspective that I bring to all the deals that we do is I was always like the see a problem, solve a problem, right? So if there's a problem that's sort of gnawing at me and I look around and I see it, immediately I think, well, somebody's got to have a solution for this. And you say the same thing with like software businesses. It's like, if you have to build your own software, if you can't get it off the shelf, then maybe other people need it too, right? Like, maybe you can't only be the only one. So I've always had this sort of drive to, like, if a problem is out there and it's nagging at me, I either want to find somebody who is, solving that problem or providing that service, or I'm going to build it myself. And I think that was really the genesis of like every business that I started. I say every, is three. And now with the launch of my new firm, it'll be the fourth. But the root of all of that is there a problem here that we can solve? Right. So, and remember, those are two distinct things. Like, is there a problem and can it be solved? Right. Because those two things don't always go together. And a lot of people will look at it and they will think about something and say, oh, this is a problem. But if it's not solvable or it's not something that's easily fixable or that people want solved, you don't have a business. So you probably, you've done enough conversations, done enough deals, and you see this, you see people pouring time and money and resources into something that is just never going to get fixed, or they're not going to fix it yet. They're just determined to do it. And so I think that really is sort of, my entrepreneurial push. And when I talk to companies now, it's like, what problem are you solving and who are you solving it for? Do they want this problem solved? Or is it, how many companies have you seen that they come to you and they say, we have the greatest technology? Awesome. But the greatest technology doesn't always win. Like, just because you have the best technology, if nobody, is interested in it, just because you built something cool, it doesn't mean you're going to be able to build a business out of it.
No, it totally makes sense. What industry was that first business in?
So it was a little esoteric, but it took some of the things that I had learned working in that insurance company and then IPO. And and I understand now why they didn't want to do it themselves. So this was work for the pharmaceutical industry, particularly. That was the first set of clients that we had. It expanded from there, but yeah, back in the 90s, the pharmaceutical companies would build their R&D pipeline by making investments in small biotech companies. Like, that was the way they did it. Now they do in-licensing deals and other things, but that was and if the drug got past a certain point in the pipeline, the FDA approval pipeline, they would acquire the company, right? And they were just really buying it for the IP. But because they were acquiring the whole company, it came along with all the things that a company has at that size: pension plans, insurance plans, benefit plan, like all these other things. And these companies that were acquiring, they had all their own versions of those things. So many, many, many times, and they were doing lots of these acquisitions, they would absorb these companies and the IP would go over to the R&D side and the product development side, and all the other stuff would just end up in treasury somewhere. And they'd say here. And they didn't really have a resource or even know how to evaluate, like, what do we do with this pension plan? What do we do with these insurance contracts? And they would just pay them just to keep them enforced, but nobody told them any better. And they would wake up at the end of the year and they'd say, we just put, I'll make up a number, like $5 million into these, and why? And nobody could sort it out. It wasn't a problem that their auditors really wanted to address. It wasn't a problem any of the brokers that they worked with wanted to address. And they just kind of were sitting on these things and piling up. And so the problem they had was, we have all these things and we don't know what to do with them. Are they good? Are they bad? Do we keep them? How do we get rid of them? And so we stepped in and said, sure, give us those. Every time you make an acquisition, we'll take a look at all of those things and we'll tell you what's good, what's bad, how to get rid of it, what to keep. And so it started off with all the previous acquisitions that they had done and going through those. And then on an ongoing basis, if they were going to make an acquisition, they would bring those to us. And like I said, we expanded outside of that. It was my first brush with what I now know to be private equity, but they were doing similar things. They were buying these companies, and in the early 2000s, there was a handful of private equity shops that were buying either distressed, we'll call them, manufacturing businesses. And you and I are probably old enough to remember this concept of the defined benefit pension plan. You actually work for a company, and when you retired, you got a check for, and it was guaranteed. It was like, when you retire, you're going to get $36,000 a year for the rest of your life. And those had to be funded every year, or there had to be a certain amount of money in those plans. And a lot of the manufacturing base had those. And when these guys acquired them, they didn't want to keep contributing to these plans. They wanted to get rid of them, and you just can't shut them down. There was a whole process you have to go through. And the first one that we looked at for a PE firm, we realized after they had acquired the business and they sent us the work to do, that they actually had what was referred to as an overfunded pension plan. And so there's more money in the pension plan than they needed to shut it down.
A lot of the issues back then were underfunded plans,
exactly.
Right?
Yeah. And they just happened to find one that had too much money in it. It was being, they're over contributed. So we went back and told them, hey, look, we can terminate this plan. And when we do, you're going to get back $15 million. And they had not put that in their calculations anywhere. They didn't even realize it. and we became their new best friends. They, like they just wanted to find overfunded pension plans to buy and take over. But that was the business. It was just looking at all these kind of dormant plans and, and terminating them and figuring out how to get that money back to the company.
Got it. So I want to get to some of the other businesses you've been involved in, but we've already established that you were involved in a company that had an IPO. You saw that, at least, I remember when a lot of it slowed down just because a lot of them have done already, but a lot of those mutual insurance companies were transitioning out of that model to go public. And then you also had a sale. So listen, every entrepreneur these days, not just self-employed person, whatever, right? In all the entrepreneurial circles in the world, I've been a member of entrepreneurial organization forever, whether it's EO, YPO, all those, right? There's always this conversation, scale and exit, right? Build your company to be able to exit. And two of the biggest ways you exit are acquisition or IPO. And so with your experience, I'm curious as to your insights, because one of the things that, the percentage of companies that actually IPO compared to the ones who say they're going to IPO, right, is minuscule. And, it comes up for us because people like, got to be Delaware C Corp because we're going to go public. And just even starting on basic structuring. And we're like, well, let's talk about that. Maybe very well. You may need, if you have certain kinds of investors, you may need to do that if you're in tech, whatever. But are you really going to IPO? And then even the decision to sell is a big decision. So with your experience, what goes into that analysis on what is the right exit strategy? How do you really get there? What's the true path to IPO and who's that for? And then what's on the acquisition side? I know it's a very broad question, but I'd love to just you're one of the people. There are only so many people who've been involved both directly in the IPO and the M&A side as principals.
Yeah, it's a great question. And you're right. There's a lot to unpack in it, but I think there's a handful of considerations that go into it, right? One is, and this is something that, again, if your audience is entrepreneur, there are people who are entrepreneurs out there, one of the things that drives that decision is your shareholders, right? And who are they? So if you've bootstrapped the company or you haven't taken outside capital, then clearly you're in control of what you do. And even if you sell, right? Everybody has this idea, like the holy grail is to sell the company, whether it's to a public or to a private buyer. But, there's lots of businesses that I work with a handful of family offices now. And there are a lot of them are just like, look, this is a great cash flowing business. Why could we sell it? We'll just keep it. It isn't always the panacea that you think it is, when you first start out. So, you've got to think, what am I building this business for? And look at, there's many multiple generation businesses out there owned by families, controlled by them. And, will continue to be, I'm just thinking, like, I just was in a conversation with somebody. I did a lot of work in the pet market the last 7 years. And, one of the largest players in the pet market is Mars. Mars is a privately owned, family run business and always has been and always will be. They have zero interest in ever selling that company, nor do they have to. And they never built it for that. So you gotta, so you sure have to think about the dynamics of that. Now, once you start taking outside investor capital, whether it's from a venture capital firm or a PE firm or whatever, now you've got a little bit of a different situation because people have invested money into your company with the expectation of some return, right? And usually that return comes from a sale. It can come from cash distributions and dividends and things like that. But generally, what you're up against is we've invested $1 million in your business and we want $4 million back at some point in time. And
how are you going to get, not just at some point in time, but within X period of time, right?
Yes, especially if you're working with a fund or a PE shop or whatever. Yes, you're going to have a clock that starts ticking the day that check clears and you start. So, and a lot of those decisions end up being made by the shareholders, the board, the shareholders about, okay, working with a company now that really does not want to, they want to continue to build, but the PE firm just put somebody on their board. And the only reason he's on the board is to get the company ready to be sold because they're at the end of their window, like you said. And he's kind of, he's wringing his hands about it and saying, no, it's not the right time, but he doesn't have the ultimate say anymore. And he gave that right up when he took a lot of money from the PE firm to grow. So the decision can get influenced from a lot of different ways. But back to your point, like you mentioned the number of people who say they're going to go public and then don't. That's been exacerbated in the last 5 or 6 years. If you look at the number of IPOs and what the market is, there's so much private capital sitting on the sidelines, continuing to fund these businesses that generally you would do a public offering because you want cash. You want to, you want to bring money into the business so you can grow it and you can maybe add some liquidity and something like that. But now this private market has matured so much that if you need additional cash, you can just go back out to the private markets and get it rather than going public. So some of that hesitation of going public is because I can get cash, the cash that I need without having to go public. And going public there's a lot of operational overhang, if you want to say it politically quite nicely, that goes along with it. And it's not, and I'm sure you can appreciate this as to your listeners, is the public market investor and the private investor are so vastly different. And I can share with you a quick story. A company that we invested in my last firm, we took them public. It was one of those exits that we had. And 4 years later, they took it private again. And it was just a classic story of the public markets didn't understand the business, so they undervalued it consistently. And so they're like, why are we in the public markets? They did the math. It was costing about $7 million a year just in costs to be a publicly traded company. Company did about $1.5 billion in sales. So, but still, it's $7 million going out the door just for administrative purposes. And we're not getting the benefit that we thought we would get in the public markets. So when I hear people say, oh, we're going to build this, scale it, and take it public, it's not always the panacea that you think it's going to be at the end of the day.
Yeah. Yeah. And, you see that, I mean, obviously it's not the only space, but on the tech side, right, is SaaS businesses, whatever, there's just such a mentality. And listen, we've been around long enough where it was less so in the early days, but there's an ecosystem that's built up, right, around this, right? Tech startups, they go to Y Combinator or whatever it is, right? I'm not picking on Y Combinator, but, there's an ecosystem of consultants, of bankers, of, whatever, that push these companies along a certain path. And for some of them, that's great. But, listen, there are only so many public unicorns. And, you can run. There's something that I've said for a while where I've tried to reframe the conversation of lifestyle business, right? Because in that world, the lifestyle business is kind of a dig, right? It's like, oh, they got a lifestyle business that, it's a little business, they're not growing. And, my view is because I've seen whether it's companies going IPO or selling or whatever, or even scaling, like this pressure to scale, where the entrepreneurs become disillusioned down the line. They're like, oh, this is what I was shooting for. And then I just have more headaches. I'm not necessarily making more money, or I've lost control, or whatever it is. And again, I'm not saying it's a bad thing overall. It depends on who you are. My argument is this: if you're an entrepreneur, you started a company, why would you be doing that unless it helps you create the life you wanted, right? Now, I've got a buddy who has it's not even a startup anymore, but had several years ago started a robotics construction company that has robots building rebar cages for columns, right? And it's very cool because rebar cages have been built the same way by hand for 100 years, and there's all kinds of injuries and whatever, right? Now, and he wants to create a unicorn, and he's truly, like, I know him well. He thrives on this stuff. He's not doing it necessarily just to get rich. He just is one of these people who wants to disrupt and have an innovative product. And he gets, he's got a contract with Neom in Saudi Arabia for that big thing where he's got robots they're building rebar, and it's great. But so my point is that that's the lifestyle that he wants, and that includes him being overseas every few months, even though he has like young kids. His wife is fine with it. He comes back and forth, like it works for them. So my argument is, hey, listen, whatever you do, right, your business should help you create the lifestyle that you want, whether that's a venture-funded shoot for the moon company, or whether that's a small, local company, or whether it's something in between. And if you're not doing it for that, like, so I want to rebrand lifestyle where, like, know thyself, right? And if you raise capital, it changes the game. If you sell to a bigger company, it changes the game. Is that stuff you really want? And if you do, then great, go for it. But there's too much pressure out there, I think, for people to go in a default direction sometimes. I don't know. You can disagree.
Yeah. No. I think that's really good advice. And, I was talking to a friend of mine about this. There's this tendency in businesses to kind of like follow the herd, right? Like what is everybody else doing? What is the thing? And by the way, today it's like M&A. Everybody wants to buy companies and roll up companies and do all this stuff. And, I always say it's like, look, if you're just copying what your competitors are doing, you're never getting ahead, right? You're just, you're staying, where they are. And so you really got to think about like, what, to your point, what do I want, right? And I'd be curious to hear, your take on this, but a lot of times we all have this kind of like the grass is always greener. It's going to be better when we're a public company. It's going to be great when we get $100 million from Apollo. It's got, whatever it is. And for whatever it's worth, like I've been on both sides of that and I've seen it. And it's just, I would say it's better. It's different, right? I mean, you take $100 million from Apollo and believe me, your life is going to change in ways that you could not anticipate before you did that. Maybe there's $100 million in your corporate bank account and that, that feels good. But, now you got a guy showing up in your office once a quarter and wanting to know how come you didn't grow enough or why'd you hire that person or what happened with it. You really got to think through, to your point, like, what do I want out of this business? And a lot of times I've had discussions. Part of what we do is buy businesses and you do that and you talk to the sellers. And one of the first things I always ask them is like, why do you want to sell? Like, what is it? And a lot of these sellers they're in their 40s, 50s, maybe even younger sometimes. Like, what are you going to do after you sell? And they all say, I'm going to go build another business. And then they go, well, if you're going to go build another business, what's wrong with the one you have? And look, I understand the rationale behind it. And, there are good reasons to sell and to take investment, but I don't think enough people spend time with that because there is this external, almost peer pressure to want to sell, to want to say, hey, I had $100 million exit or a $10 million. And it doesn't really matter. One of the first deals I ever did was buying an insurance company with a PE firm and sitting with the seller during the process. And they were haggling over probably like $1 million one way or another in the sale price. And you say, look, the haggling was that the firm that was acquiring them, our firm, found some stuff in the diligence and wanted to lower the price by $1 million, right? And he was really upset about that. And he said to me, look, I have this business, it's family business, second generation. I take $3 million out of this business every single year. And I can do that for the next 20 years easy, right? I mean, without what I've been thinking about it. So I have everything I want. If I want to buy a car, I buy a car. If I want to take a vacation, I take a vacation. If I want to buy a house, and the money that I'm going to get from this, that's not going to change. Like, it's not like this is billions of dollars and I'm going to have a G4 and a yacht. And he's like, I'm going to have basically the same lifestyle. I'm just going to have the money in the bank. So it's not in his mind. It wasn't about the $1 million, that way. It's like, that's not changing the game for me. It was about, you guys said you're going to pay this and you should pay this. And, it was more about the principle than the amount. But the point I'm making in the story with you is his life wasn't going to change after the sale. And he was really actually kind of almost depressed when the business was sold because he had been going to that business every single day since he was 18 years old. And he was, that was 20 plus years. And now he wasn't going in anymore. And it's like, what am I going to do? The sale went through and he's very happy. And I've spoken to him a few times over the years and he's a really good guy. But it's a really interesting dynamic as to why do I want to sell? What am I, what is the purpose? Do I just want to, check that box and say I sold the company, or do I have another idea? And I'm sure you've seen it too, good reasons. But when with your friend who wants to scale this business into a unicorn and do this, is that just who he is? Or is that like, has he thought about like, well, why don't I just build this thing and see where it goes?
Yeah, it's interesting. In his case, I think it is sort of who he is. He was talking about it from before he had, when he had a different business that wasn't scalable. And it's funny because obviously he's gone through all the classic cycles of every year, whatever, he's running out of money and then he's got to raise more capital and, that typical cycle. And, he'll call me up sometimes, whatever. And he knows one of the things I'm going to say to him is, this is the game you decide to play. Like, this is, I mean, there's nobody who writes the book later on who is successful and says, yeah, it was a simple road. We always had enough money and, everything went smoothly. Like, this is, and ultimately, he's okay with that. So it's kind of funny. The other thing, that you mentioned about, I mean, we won't spend a lot of time on it, but we've had a number of episodes where I really dug in to this sort of like identity issue or founder depression that happens even with people who sell for life-changing or generational money, right? Because it's not about that. It's like, I'm glad you mentioned that. Let's take a break from the show for a minute so I can tell you about an incredible resource my team and I have put together for you. Secrets of Deal-Driven Growth, Creative Ways to Grow Your Business Even in Challenging Times, is a powerful ebook that helps you take DealQuest podcast episodes and apply them to your own life and business. This is the ideal tool for anyone looking for creative ways to grow as deal makers, and you can get yours now. It's as easy as heading to coreycupford.com/workbook and downloading your copy. While you're there, you can also consider joining our dynamic, deal-driven community of founders, experts, small business owners, and entrepreneurs. Now back to the show. All right, I want to hop over. So you were on the sort of entrepreneurial operating side, and then you switched over to investing at some point. Talk to us, a little bit about that journey. What had you do that? How that came about?
Yeah. So the first business, like I said, I was an accidental entrepreneur, and it was a bootstrap business. I mean, we raised no money for it. And like I said, we started with a project, and we were lucky enough and to be able to just continue to fund that through, more projects. So that, I didn't raise any capital, but I did sell the business and kind of go through that cycle. And then the next business that I started after, 2 years of transitioning the business over to the buyer, similar thing, we saw a problem. This was in the lending space during the 2005-6 period into 2007-8. And that was, there's a much bigger cash need in that business, right? So we were going to be on the lending space. We needed a much bigger balance sheet. So we started that, or I started that with some of the money that came from the sale of the first business, but very quickly knew we were going to have to go out and raise capital for the business. So just like you were saying, you go out, you start meeting investors, you're pounding the streets, you're doing presentations, you're trying to convince people to give you a bunch of money for your business. And, we were lucky enough to get some term sheets. I won't take us off on too much of a tangent on that process, but I'd been a bootstrapped entrepreneur, had sold a company, and now we had raised capital for this business. And when we sold that business, one of the private equity investors said, "Hey, we like you. This was great experience. They made some money, and so did we." And at the time, they had a program, which is, I think they're still around. It's called an entrepreneur in residence, right? They're like, "Hey, we'd love to back you in your next thing. We don't know what that is. You don't know what that is. You want to come and spend some time with us, and we'll figure something out." And immediately when I got the opportunity, I was like, "Look, I've been on the sales side, selling a business. We did buy a business with our second company. So we had acquired something. We had raised some capital, but I had never been on the deal side. And I'd never been on the side of the check writer, right? And how do these deals get done?" And I was curious about, I want to see that side of the equation. I want to see how these deals get done and how decisions are made on what to invest in, what not to invest in, how to structure an investment and all of that. And so I went to one of the partners and I said, "Hey, I'd love to, be on the deal side." And they said, "Well, look, you're not here for deals and we don't really have a spot for you." But I was pretty persistent. And they said, "Look, go find us a deal. If you go find us a deal, you can ride shotgun on it. You can be a fly on the wall." And I was fine with that. I was great. I saw the opportunity. I'm trying to learn from these guys. So I went out, I found us a deal. And, I was in every meeting. I don't think I contributed very much, but I was there. I saw the process. I was able to be in the IC meeting, investment committee meetings, and talking with the partners and being on some of the calls. And it's like anything else. That's the best education you're ever going to get, is being in the deal, right? I mean, like you mentioned, I had been to a business school and I had heard all the theory and done all the case studies, but there's nothing like actually doing the deal and seeing all the ways that, just like you're talking about your friend or any entrepreneur is running out of money, got to go raise more. These deals are dead 10 times before they close, right? I mean, how many times have we been in a deal where everybody's like, screw it, we're walking away, we're done. And then 2 days later, everybody's back at the table and we're doing it again, or this went sideways, the bank said this, or, we found this in your diligence. And, these deals, it's just like anything else. And until you've done enough of those, you realize that's just the case of these things. You just can't get too upset about this stuff, and people are going to slam the table and leave the room and yell at you and whatever. And we just have to kind of understand that that's part of the process. But making that transition over and seeing that deal get done and watching, the ultimate closing and going to the board meeting and getting the approvals, I was just hooked. I was like, yes, I finally figured out this is where I want to be, because I just saw the impact that they had on, one, the sellers were going to walk away with a lot of money and it was changing money for them. And two, the company got new life. These, they were at the point in the business where they were just kind of going through the paces, and it was a good business, but it wasn't what it used to be. And I think everybody got a little bit tired. And with one check, they exited the founders, put money into the business, and they continue to grow it and make additional acquisitions. I was like, yeah, that's what I want to do. Like, that's the business that I want to be in, is be able to execute on that as, more than I want to go build another lending platform or business terminating engine plans.
Yeah, I love it. Yeah, that's why you mentioned about sort of having that kind of experience, and you alluded to the fact that, like, once you go through it a number of times, it's just part of the game, part of the deal, part of the whatever. I think we closed 6 deals in December this year. I guess technically one or two of them were effective January 1. But the one deal that I was personally most involved in, because my team does a lot of the work, I handle high-level strategy, structuring, negotiating, was a deal for a client I'd been working with for 10 years, and she wanted me personally involved. And it was a lot of moving pieces, whatever it was. And she said to me, Corey, how do you, there was everything you talked about, right? There's, the deal's off. We want to, all right, let's hold off on this piece of it. Like it was so many moves. And she's like, how do you, what I love about you, how do you stay so calm? I'm like, listen, I've done hundreds of these, thousands, right? Whatever. I said, she happens to be a financial advisor, right? In wealth management. I said, let me draw an equivalent for you. When clients call you because the market's down 15% or whatever, 20, and they panic, and you tell them, don't worry about it. We have a diversified portfolio. We're long-term investing. Don't get, right? Because you've been through this 1,000 times. You got, whatever. This is the equivalent. This is what I do. That's what you do. This is what I do, right? It's like, don't worry, don't worry, they'll come back, right? Don't worry, we'll get. I still think we're gonna get this closed. And of course, it closed, and everybody was happy, and now they're building something. It's great. So,
and I'm sure to you that, like you said, that just looked normal, right? That was just sort of like, yeah, this is what it is. And I use I think that wealth management example is a really good one. The thing that clicks with me, or that I find I use, is I do a lot of martial arts. So I've done a lot of the MMA and jiu-jitsu and boxing, and you can watch the UFC. You can think like, sure. I mean, how many people are like, yeah, I could do that. Or it doesn't look that hard. Right? But then you get in the ring the first time and you're scared to death and it's chaotic. And if you're watching it up close, you're like, what is going on? But you realize these guys have hundreds of hours of reps, and they've been in these positions before. And to them, it's just like, okay, this is crystal clear. It makes sense. I had a PT appointment this morning, and the chiropractor I was working with, he came and watched one of our sparring sessions, and he's like, it just looked like chaos to me. I'm like, yeah, but it was totally controlled. We all knew what we were doing, and it was doing, but that's just because we've been doing it for so long, and it's just normal, right? So it's like, this is where I think a lot of founders, management teams, especially now with this big push towards M&A, they all think it looks so easy, and they've taken a course or they've read a book or they listened to and they just don't appreciate the difference between, I would frame it as the difference between a parrot and a practitioner. It's very easy to be a parrot. There's lots of parrots out there. I can hear something on a podcast and repeat it. Doesn't mean I know how to do it. And I'm sure this is the same value that you bring in your firm. It's it's not when everything goes right, because that's easy. It's when the curveball comes, when something goes wrong. And you and I both know something's going to go wrong. Some curveball is going to get thrown. And now what are you going to do?
Yeah, love that. So one of the things I love when I have people on who have been on sort of both sides of a table or both sides of a situation is to get sort of what they learn, their perspective. So, you raised capital and then you became an investor, right? So what are some of the things, or is there anything that comes to mind where you were on the raising capital side and you're like, why the hell did they do it that way? Or I would do it there, whatever. And then you get on the other side. I remember when I worked in big law, what they call big law now, that they didn't call it back in my day. And then, at 30 years old, I got a shingle and opened my own thing. I had a vision of how I wanted to do things differently. And I thought there were a lot of problems with the way big law operated. And, probably 80% of what I thought was right. But there was that 20% when I got to the other side, I was like, oh, now I understand why they do it that way, right? So anything sort of in that realm when you became an investor from what you had a different perspective when you were raising capital?
Fascinating question. I'm not sure if I can pinpoint one thing, why do they do it that way? I mean, there's so many different ways to structure a deal and so many things that are important to the investor that might not be important to you, and vice versa. Things as simply as a liquidity preference, right? So why would you get your money back first? Well, just think about it, right? I mean, that's from the investor's perspective, it makes all the sense in the world, right? They're putting up the money. They're the ones at risk, and they should get paid back out of the first dollars until they get their money back, and then you split it. But when you're on the other side of the table, you're like, well, that's not fair. We should all split it. It's just all kumbaya and everything. So there are certain things like that over time, and I think, entrepreneurs can kind of get around that. I think the biggest thing that I took away from being on both sides of that equation is, if you make a bad hire, you hire the wrong VP of sales, that might hurt for a short period of time, but it's correctable, right? Like, you can fire that person, hire somebody else. If you bring a wrong investor in, man, that is a totally different story. You can't fire your investors, right? I mean, maybe you could buy them out, but that's usually not all that practical either. So the biggest thing that I learned is like, and being on the investor side, I was really, really surprised how little this happens. Is the entrepreneurs, they put themselves in a position where like they come on bended knee, right? Like, we need money. We just want money out. And one, they're willing to basically take anybody who will write the check. And two, they may negotiate over some of the terms, but, they see that their bank account getting low and the possibility of getting money over here. And, they really don't take the time. I mean, one is they should be starting a lot earlier than they do. You don't want to be negotiating when you've got 1 month of payroll left in the bank. That's not a good spot to be in. But a lot of times they just wait too long to get started. But so that's just a fundamental thing. But I really try, especially now when I'm working with entrepreneurs who bring me in to help them raise capital or sell the business, is we actually put together an investor interview. Like, we're interviewing the investors, right, about how they're going to behave once they make the investment. And I have yet to run into an investor that is offended by that, who won't be cooperative with it. And if they do, then you know a lot about that investor right up front, and you probably just want to walk away at that point. But when I talk to other investors, and certainly even within the shop I used to work for and today, nobody does this. Like, nobody sits down and says, okay, we're going to have a really shitty quarter. What are you going to do? How are you going to respond? We're going to miss our numbers, or we're going to blow it out here, or something's going to, let us talk to some of the other CEOs that you have worked with. I mean, talk to some of the other investors. Like, that's totally within your right to do as the entrepreneur. But everybody's, I don't want to be too, hyperbolic about it, but people think like, well, they're the investor, they have money, I can't ask those questions, I just have to, answer. And honestly, like, it's better for everyone if you have that communication up front and you establish what that's going to look like. How do you like to run a board meeting? What about hiring? What about acquisition? Like, if you can get a sense of that early on, you're going to have a much better relationship, because you're going to be with these people until the exit. And even then, they're going to have some say in, who do you sell it to? How do you sell it? What price do you sell it for? It's to some degree. And if you have we've all had, especially, and I think PE is not, drape themselves in glory in this in any way. But during that period where you're raising the capital, it's like dating. Like, everybody's on their best behavior. They're putting on their nice clothes. They're putting their makeup on, doing their hair, all that stuff. And then you move in together and they're like sitting on the couch with ice cream in their sweatpants. And you're like, what the heck? That kind of thing. And you kind of skip over that step in the investment world. And that's the biggest lesson that I took away from being on both sides of that is like, it's okay for you to interview the investor, and it's okay for you to want to know who's going to be part of your life for the next 5 to 7 years in a very meaningful way before you take their money. Because once you take their money, man, it's totally different.
Yeah, I mean, this one way to phrase it might be this reverse due diligence, right? And it's true in M&A as well. I mean, it's become more acceptable these days, but I remember there were days back, again, been around for a while, where like, there'd be big either public companies, or even more so if it was large privately held companies where there was less public data available. And we would try to get reverse due diligence, whether it was financial, whether it was legal, whether it was whatever, right? And they'd be like, what are you worried about? Where's so-and-so, right? We're not going to give you that. And then this is before, Enron and WorldCom and whatever. And then one of the biggest gifts actually of the Enrons and the WorldCom situation was that it enabled me to say, when a buyer said to me, oh, where's so-and-so? I said, yeah, that's what Enron and WorldCom told people as well. Like, we at least had some examples where, where these big, supposedly highly successful companies turned out to be a problem. So that helped us get some reverse due diligence. All right, before I ask you my final two questions, tell us a little bit more. You alluded to it as a good segue. on like what you're doing, who you're working with now and what you're helping them do. And, I want people to understand more about what you're focused on these days and who you help.
Yeah, thanks. So having been in these different domains for, going on 25, 30 years now, and spending the last 15 in the private equity and investing side, I realize that there's kind of this gap in the market. And I don't think this is, particularly prescient, but I haven't seen anybody else, like I said, see a problem, solve a problem where if you're in the startup phase or the early stages of building a business, there's lots of resources for you. You mentioned Y Combinator and these startup groups and VCs and everything else. And if you're, let's call it 100 million plus of revenue, you're considered to be a mid to large size company now. You've got access to consultants and lawyers and, auditors and all these other people. But there's this dynamic, and I've seen this play out quite a bit, where you kind of get to this like $10, $15 million mark and you're kind of pushed out of the nest by the VC guys, but you're not quite there where you can go hire BCG or McKinsey, or even if you wanted to, Deloitte to come in and help give you stuff. So you're really in this place where you're kind of in no man's land, and you still need a lot of the same type of tools, same type of advice. Maybe you're looking to do acquisitions. Maybe you need to raise capital. Maybe you're thinking about a sale. Who do you go to that can kind of put that team together and has the experience? You're not going to get the attention of the big investment banks at that point. They're not interested in a $5 million or $10 million acquisition that you might do, or raising $20 million for your company. And even on the strategy side of things, there's a big gap in I would say, the quality of the advice and the people that are serving that market. And I just kept seeing that over and over again. So last May, I took some time off and went out and I met with a bunch of founders in that space and just tried to understand, like, what are you seeing? What kind of problems are you having? Who do you go to for this kind of stuff? And almost universally, they were going to each other, right? They were calling up other founders who were in the same situation and more commiserating and having a therapy session than getting any real advice, because they just didn't have anybody, or they would be taking a course from some YouTube guy or reading a book, which it's not to knock those guys. I mean, get your information where you want, but there wasn't anybody providing like a high quality, high level of service for M&A advisory or strategic advisory or capital raising, sale in that space. So that's the business that we launched back at the end of last year. It's really to serve that, I would call that lower middle market, right? These guys that have a decent business. It's probably not going bankrupt tomorrow, but they don't know how to scale, right? They think they do, but in reality, it's a lot harder. They want to acquire their businesses, but they've never done it before. And they don't appreciate how hard that is, not to just buy the business, but then to integrate it into your business. And then a lot of them will sell, and they'll sell, and they won't get the maximum value out of it because they don't know how to position the company the right way to get that price. They might end up with a price, but a lot of times they're leaving money on the table. So the firm today, in addition to making venture investments in small early stage companies, they do a lot of work with founders and management teams in that $10 to $100 million range around acquisitions, strategy, scaling, and capital raising.
Love that. Love that. So if people want to find out more about that business or anything else you have going on, where should they go?
Yeah, I mean, the website cisventures.net, N-E-T. Be a new site up here in about a month, but there's a lot of information on there about the services and what we do and some of the things and some good resources there. And I'm on LinkedIn. I'm not too big on the socials. I've got to get better at that. My daughter keeps telling me, Dad, you got to be here. So eventually I'll get there. But yeah, cisventures.net is the best place to find me.
Robert, my final question on the podcast. By the way, before I even go there, I want to say, I feel like we could talk for several more hours, if not days, just between, all your background and experience, all the deal stuff. And, one of the reasons I do this podcast is because I just love talking about deals to deal makers who really understand it and get stuff done. And, I'm sure we could do hours on the war stories alone, hours on how you structure these deals or how you choose to make investments and so maybe we rarely have guests back, at least not that frequently, but maybe we'll have you back at some point. But any case, because there's so much wisdom here, but we are at the end of our time here. So I will ask you my final question, which is always about my highest value in life, which is freedom. And for me, that means everything from freedom around the world for people from oppression to why I've been an entrepreneur for decades and haven't had a boss. What does freedom mean to you, and how does it impact your life and business?
That's a great question. I think to me, it's going to sound like an equity guy, but freedom to me is options, right? It's having options, being able to do the things that you want to do, not that you need to do.
Yeah.
And I think that's what this businesses give us, is that they give us this optionality. It gives us the ability to say no to. I think that's the biggest thing. I think that I'm just kind of thinking you do this in real time, but I think it's that freedom, the ability to say no, right? And not do the things that you don't want to do. And so many of us are trapped in the I have to, or I need to, or I'm supposed to. And that feels like a cage to me. So, being able to just say no, be yourself, have options. To me, that's freedom. And I think that could be freedom to practice whatever religion you want to, or color your hair whatever you want to, or say whatever you want to. It's like you have those options, and the oppression comes in when those options are taken away from you and somebody else is dictating what you can and can't do. So you losing options to me is losing freedom. So I think that, and maybe I'll come up with a better answer. I really haven't thought about them. It's a really good question, but to me, like right off the top of my head, freedom is having options and the ability to say no.
I love that. Phrased that way, on the ability to say no. I had a whole conversation with somebody. We won't get too far down because we're well over time here, but where I did a little video on it, actually. Here's the thing. The key is, if you really want to be on purpose and do the stuff that you're called to do and the difference you want to make and how you want to help people, you actually have to say no to a lot of stuff, right? Because to be all in on the yeses, on the few yeses that you should be, there's many more no's. And a lot of people don't feel like, and maybe practically they don't have that freedom. So I love that answer. Robert Levin, thanks for being such a great guest on the DealQuest podcast.
Yeah, thank you, sir. It was a pleasure. It was a really fun time to spend with you.
Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to kupferlaw.com. That's kupferlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.